Hello, welcome to European Open briefing for Tuesday, April 24th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be taking a look at the latest developments in the currency markets today. The US dollar continues its winning streak. It's climbed to 3 months highs this morning on the back of the widening yield spread between US Treasury notes and other government bond yields. The euro and the pound, as a result, have slid to multi-week lows. The Australian dollar is also falling sharply against the US dollar, hitting 4 months lows. It came under additional pressure on the back of soft inflation numbers out of Australia, and the New Zealand and Canadian dollars are also sliding against the resurgent US currency. And here we can see in the chart, in the daily view, dollar index is at a 3 months high. It hit a top of 91.08 in early Asian trading. Dollar yen reached a 2 months high of 108.91. So we are seeing overall positive risk sentiment as those geopolitical risks relating to North Korea, Syria, as well as the trade risks with the trade dispute with China, all of those risks appear to be subsiding, at least for the time being. And we also have the rising inflation expectations on the back of the higher oil prices, as well as, of course, the solid US economic growth, which is raising expectations of higher interest rates in the US over the next year or two. So all of that has led to widening yield spread between US bond yields and its peers, particularly against Japanese and German government bonds, and that's why we're seeing the dollar coming back in favor with traders. And yesterday we did have the flash PMIs for the US. We saw the manufacturing and service PMIs, both of them beating expectations in April. We also had some strong housing data for March. But all of this is having a negative impact on other currencies. The euro is also struggling. It fell to a near 8-week low, 1.2183. Before recovering just above the 1.22 level against the US dollar. Yesterday, this Eurozone PMIs weren't too bad. In fact, they were broadly positive. We saw both the services and the composite PMIs for the euro area improving in April, though the manufacturing PMI showed continued weakness and also missed its estimates. Investors weren't too pleased with that. We saw very little boost, if at all, from those figures to the euro. The main focus now for traders is that ECB policy meeting on Thursday, where we might potentially hear more dovish views from Mario Draghi, especially given the recent run of unimpressive economic data for the Eurozone. Sterling is also not doing too well. It has managed to stabilize just above the $1.39 level after reaching 5-week lows. Of course, last week we had that sharp sell-off on weak inflation and retail sales numbers, as well as dovish remarks by Mark Carney. There's a little bit of political uncertainty as well after the May government suffered 3 defeats to the EU withdrawal bill. 3 pieces of the EU withdrawal bill were rejected by the House of Lords, and they will have to now go back to the House of Commons to be amended, and that could put additional pressure on the May government, as well as cause a split within her cabinet. But overall, the main reason why sterling is falling is those falling odds of a rate hike by the Bank of England at the next meeting in May. The Australian dollar, we had inflation numbers early this morning out of Australia. It showed the annual CPI rate unchanged at 1.9% in the first quarter, missing forecast that it would rise to 2%. So that is now the 9th straight quarter that inflation has remained below the RBA's target band of 2 to 3%, and all of that, of course, has been negative on the Aussie this morning. It plunged to 4 months low of 0.7577 before recovering to around the 0.76 level. This soft inflation numbers come after last week's disappointing employment figures, and all of this is ahead of the RBA policy meeting next Tuesday, where we may see the RBA possibly becoming more dovish after this recent data. But overall, the expectations are that the RBA will remain neutral for much longer. So all of this has been negative for the Aussie. It has now wiped out all of its year-to-date gains against the US dollar. It's also not looking too well for the Canadian and New Zealand dollars either. We can see USD CAD rising to 3-week highs of 1.2861. So the loonie has come under pressure from dovish remarks by the Bank of Canada Governor Stephen Poloz. We already saw a cautious monetary policy statement last week, followed by 2 dovish speeches by Poloz. He spoke again yesterday, where although he sounded more upbeat about the Canadian economy, he said that the current rise in inflation to about 2% is temporary, so they're expecting inflation to fall back to below 2%. So that potentially means the Bank of Canada could remain on hold for a while longer. The New Zealand dollar, last week we had disappointing inflation numbers. It has now fallen to 3.5 months low of 0.7103. So apart from weak data, the widening yield spread is the main reason why we're seeing this additional weakness in the Australian and New Zealand dollars, and also to an extent to the Canadian dollar as well. And quick look at oil prices. We can see Brent crude rose to a fresh 3-year high of $75.27 a barrel early this morning. WTI is back above the $69 a barrel, though till now it remains below those peaks from late last week. So Brent crude seems to be doing a little bit better this week. So apart from those OPEC-led cuts in oil output, we have the possibility of fresh US sanctions on Iran, which is also boosting oil prices at the moment. And some risk of sanctions on Russia and Venezuela as well. Plus, there's been some disappointment that the US oil rig count hasn't been rising even faster given the recent surge in oil prices. So overall, all of that is boosting expectations for further increases in oil prices over the coming months. We can see both WTI and Brent crude rising sharply above their 21-period exponential moving averages. And finally, looking at today's economic calendar, we just had the German IFO Business Climate Index, which fell below expectations in April. But later on, the main focus will be on the US Consumer Confidence Index. That's it from me. Thank you very much for watching, and have a great day.